Well, good morning, good afternoon, and welcome to today's webinar organized by the IFC. My name is Julia Assad, Senior Investment Officer in the Financial Institutions Group of the Global Housing and Capital Markets team at IFC. I will be moderating this 1-hour session to disseminate the key findings of the Her Home 2 report on housing finance for women, specifically for Ghana. We'll open today's session with Montserrat Ganuza, the global lead for the housing finance for women and our own IFC gender specialist, who will give us the opening remarks. We'll then move to our 3 specialist panelists. We're very lucky to have them today. We have Alison Changana, and please forgive me if I say her name incorrectly. She's the head of research and market intelligence at the Center for Affordable Housing Finance in Africa, otherwise known as CAF. Maureen Katuvesrauna, I'm sorry, Maureen, if I said that wrong, Senior Global Housing Specialist at the Financial Institution Group at IFC, my colleague who has extensive experience in housing in Africa. And last but not least, Kojo Abul Kafur, Executive Head for Home Loans Business at First National Bank, the leading provider of residential mortgages in Ghana. Before we start, I kindly ask for you to mute yourselves while the panelists are speaking. During the session, you're welcome to share your questions in the chat function on your screen, and we will try to address them during the Q&A. We'll have 15 minutes towards the end. Please note that this session is being recorded and will be made available to participants on demand. Montserrat, good morning, good afternoon, over to you. Thank you.
Thank you, Julia, and good morning and good afternoon to the participants. I'm very happy to be here talking about this report, Her Home 2, Housing Finance for Women in Ghana. And let me just start with an obvious fact that women are half of the world's population and also half of its economic potential. But women are also less likely than men to own a home, and that's a fact. And the reason why, or the reasons why, is because they usually work in the informal economy, and sometimes are really unfamiliar with loan processes and procedures. And also sometimes they don't even know or fully understand what are their property rights, or depending on the country and the context, they are really restricted by cultural norms or legal practices. And so we believe that the development of new public policies or financial strategies, inclusion strategies with a gender angle, as well as the development of financial services and products that are tailored to the women's needs, can actually increase their access to housing finance and have benefits not only for the women, but for the local and the national economies. Also, it is proven that women who own their homes, they enjoy greater financial stability, but also independence and so forth. And so they can contribute more to their communities' economies. At the same time, financial institutions that have been able to provide offerings tailored to women and to their needs are also better positioned to seize opportunities in competitive and a growing market. In this context, IFC did its first Her Home Housing Finance for Women. And the first one focused on Colombia, India, and Kenya. And this was in 2020. In this first Her Home, we shared the insights into the barriers and the challenges that women face in obtaining housing finance in these countries. And also, we used the opportunity to offer suggestions or recommendations for policymakers and financial institutions to actually overcome these challenges and improve women's access to finance. For this first Her Home, we actually did 3 virtual panels focusing on the countries. We did one in Kenya, another one in India, and another panel on focusing on Colombia. And what we wanted to do in those panels were to disseminate the main findings, but also actually have a conversation and engage the relevant stakeholders. And so building upon the findings of this original Her Home study, IFC's Financial Institutions Group, or as we call it, FIG, developed a project, an upstream project that became what we know now as Her Home 2, Housing Finance for Women in Ghana, Senegal, and Indonesia, to really continue discovering what are the market constraints in these other countries, but also to actually find and share possible solutions that could unlock private investments in this space. And so for this second research, we partnered with the Center for Affordable Housing in Africa, CAF, to conduct the research on behalf of IFC. And so we also want today to disseminate the main findings of this groundbreaking report and have a conversation with the relevant stakeholders such as yourselves to actually further innovation, collaboration in this space, in the housing finance industry, to better serve women customers and ultimately really improve the lives of millions of women, their families, and their communities around the world. So without further say, I'm going to pass it on to you, Julia. Thank you so much.
Thank you very much for the opening remarks. This is very helpful. IFC is really pleased to be partnering with CAF to develop this, and the success of Her Home 1, and now we're having Her Home 2, and we want to make sure that this is well disseminated. Alison, we'd want to hear from you on the key findings in Ghana and some of the research and the findings that came out of the report and some of the recommendations, please. Over to you, Alison, and welcome.
Thank you. Thank you very much. Let me just make sure that we're sharing. Please, can you confirm that you can see the slides?
Yes, we can. Thank you.
Okay, lovely. Thank you, and thank you for the opportunity. It's a pleasure to be here. As I was introduced, my name is Alison Changana, and I'm with the Center for Affordable Housing Finance in Africa. We're an NGO that's based in Johannesburg that works across the continent. I'm also here on behalf of the African Union for Housing Finance, which is an industry body that CAF is a secretariat of, and that is co-hosting today. We were appointed by the IFC in 2021 to undertake this work in both Senegal and Ghana. I'll present the findings on Ghana now, and I just wanted to acknowledge our local consultants who we relied upon for the field work, which was a team from PSS Urbania. So I'll try to summarize really the very key points to take from the findings in Ghana. As we're aware, women in Ghana face a host of challenges when it comes to accessing housing finance. The first point is around women's land tenure insecurity and its prominence in urban and rural areas. Given that about 80% of land in Ghana is under customary land tenure, then there are customary practices and institutions that govern the transfership and ownership of that land. And that causes one of the obstacles around women's tenure security. Also, the issue of reliable land records creates land disputes in many areas. There has been a progressive move around the New Land Act that puts a better framework in place from the perspective of women. But really, the practice around property rights and inheritance is still largely influenced by customary and traditional frameworks, which make it difficult for women to inherit property. In Ghana, as in most of Africa, really, the main way of acquiring a house, of course, is self-build. It's to use personal savings over time of the household and to build the house incrementally. This is true for about 90% of the housing that's delivered in Ghana. Very few houses are outright purchased, either existing homes or new homes, and that's largely restricted to high-income households or those in the diaspora. As Montserrat mentioned, few women have sole ownership of a house. So according to the Demographic Health Survey back in 2014, so 10 years ago, that rate was about 6% for women and 10% for men. As part of this research, we did a mobile survey, a cell phone survey of 200 women. And of those 200 women, only 50 of them indicated that they actually owned their home. And of those 50, 20 had inherited their home while 18 had built it themselves. Only 10%, only 5 women out of those 200 had bought their house. So as I said, most people are using personal savings to build gradually as the main means to acquire a house. Montserrat also mentioned the prominence of the informal economy. And I think this is true in many African countries and is also very true in Ghana. According to the 2015 data for Ghana, 80% of women are in vulnerable employment, which means that they are either self-employed or they're contributing family workers. And that is in comparison to just 65% of men. You can see here that also the formal employment sector of salaried employees is quite small, only almost 2 million employees in 2015. And only 38% of those were women. So women are underrepresented in formal salaried employment, and that has implications for their access to housing finance. The other key point to note around the context, the economic context, is that small and medium enterprises are critical to the economy and engage about 72% of the workforce in Ghana. So women work in small businesses, largely in the informal sector. 55% of the informal sector is comprised of women. So women are running their own businesses, or they're operating as traders. They may have a small scale shop. They may do fashion, sell fabric, they may be selling food. There's lots of small businesses that women engage in and set up themselves. In addition, there's the home-based businesses. So women will use the home, not just to consume it as a place of shelter and a gathering place for the family, but women also will let out homes in their house for extra rental income, or perhaps use the frontage and the space of the shop to trade in a small business. Within Ghana, we're seeing that financial inclusion is certainly gaining pace, but men are being included in the financial sector at a greater rate than women. And I don't think that's unusual, again, for the rest of Africa. According to the data that we found, about 54% of women hold a bank account, compared to 62% of women. Most women in Ghana use formal non-banks or informal financial services, which is an important point. In terms of mobile money, this is a growing area within Ghana. And according to 2017 data, we saw that nearly 40% of adults, men and women, were owners of cell phones, which was quite an increase from previous years. So I'm sure it's much higher than 40% at this point. In addition, the government has addressed this issue of financial inclusion by putting together a strategy back in 2018 that is rounding up now. And the purpose of that is to prioritize the development of digital financial services. So on the back of that, mobile money services are really a dominant fintech business in Ghana. The total number of money mobile transactions increased from 226 million back in 2020, and then just 1 year later was 338 million. So it's rapidly expanding. And we see then that about 34% of women have a mobile money account, but that again is compared to 44% of men. So increasing, the space is certainly thriving and growing, but we're seeing greater growth in terms of pulling in men than women. An additional point is that the mortgage market in Ghana, again, similar to other African countries, is quite thin. So Ghana's mortgage market is really in elementary developmental phases with a mortgage to GDP ratio that's quite low, less than 1%. Less than half of the banks offer mortgage products. And one of the key issues is that many of the local banks prefer foreign currency denominated mortgages in order to address Forex risk. But the consequence of this, of course, is that it increases the interest rates. And interest rates for CD denominated mortgages, local currency, remain very high, pricing them in many times, making them unaffordable to households. There's also the issue of the legal framework. If banks, of course, are unable to foreclose, then this increases their risk, their lender risk, which will again impact on the interest rates. I think the main thing that we saw in our key respondent interviews, our focus groups, and through the mobile surveys was that women are very hesitant to use their homes as collateral. And this is out of concern of their lack of steady income, largely because of being in the informal sector. So of those 200 women that I mentioned that we interacted with through the mobile survey, only one of them had used a mortgage to finance a home out of 200. So a very unusual approach at this point to accessing financing. Largely, their concern was that women were concerned. They voiced their fear that if they borrow against the house to obtain loans to support their business, then they will lose their property due to their income, low income or seasonal or unsteady income. So the risk was too high in their view to go with formal credit and mortgage. So I think the key point here that is a important thing to discuss today, perhaps, is that if we don't have sufficient data about this market, then lenders are very wary of borrowers that aren't part of the norm, part of a formal job with a pay slip that can be shown monthly. So informal or seasonally employed workers, and certainly women, are of less interest and less attractive to lenders. So what we see then is that women prefer informal institutions and microfinance institutions. This includes the susu, the traditional susu, as a savings vehicle. And for borrowing, many Ghanaians, and women in particular, prefer personal arrangements as opposed to going to a formal bank for credit. There are savings and loans companies as well. But one of the things that we noted, and that I think is a key point, is that the microfinance institutions are largely focused on lending to small businesses and not aimed towards lending for housing construction or housing acquisition. So there were only a small number of MFIs that had provided some type of housing finance in the last decade. Largely, they concentrated on supporting businesses. Which leaves us then, I'm going to wrap up, which leaves us with three main conclusions that I want to be the takeaway from the presentation. I think as a result of the situation that we uncovered, housing really is underperforming as a financial asset, particularly for women. So borrowers are rarely using their home as collateral. And this is partly as women lack sole or uncontested claim to ownership. So without the formal documentation, it's difficult to obviously access a mortgage. The legal framework also has an impact on this, as the social norms and the legislation often fail to uphold women's ownership rights. As a result, women are unable to assert ownership in the event of a spouse's death. And thus they don't get the equity through the inheritance that they can then leverage financially. The second point then is that the nature of women's employment constrains their borrowing options. This is the link between employment and credit. So women who are predominantly in the informal sector don't necessarily have steady income that can be verified by formal records. Or they may be earning money from a number of sources, which also makes banks nervous. So they typically don't then have an appetite or haven't designed products that understand this situation that women are in and the needs that the women have. In this situation, microfinance institutions are better suited to lend to women who have informal incomes. But as I mentioned, very few microfinance institutions have designed and put out products that have to do with housing specifically. The third key point, I think, as a main conclusion from this work, is a really important one. Very few housing finance products target women. And we've seen, particularly in Ghana, there's been a number of initiatives around increasing financial inclusion and various products and services. But at the end of the day, there's a disconnect. So we have financial products and services that are targeted, right? And they're targeted at women to promote women's financial inclusion. That's happening on one side. On the other side, you're seeing housing finance products growing slowly. But the housing finance products aren't targeting women. And the financial products that target women aren't including housing. So we're not seeing the connections and the overlaps. Women's financial inclusion essentially doesn't extend to housing access, and housing finance products aren't specifically targeted to women. And that means that there's a great space there for financial institutions to think about products that address the particular needs and demands and capacities of women. So what does that mean? That will require three major things. The first is a clear, evidence-based, segmented understanding of the target market. So lenders really need to have the data to understand the demand and the capacity of women and take into account the multiple roles that they play in relation to housing. So keep in mind that women want to improve their housing situation through purchase or construction as consumers of housing. But they are also suppliers of housing in terms of being micro builders or developers or letting out a room and serving as landlords. And thirdly, they're also using their house as a critical space for business, for small, medium-term enterprises, and using their home perhaps for storage or as a frontage or, of course, as lending out. So the first thing is that the lenders and the financial institutions really need to understand that market and what's happening with women and how women relate to their housing. The second thing is the intentional design of projects that are responsive to women's needs and values. So once that understanding is in place, it's possible to shape and adapt and create financial products that are of particular use and applicability to women. And there are ideas here. Saving-linked products, family group lending products are another possibility. Title insurance would be a key way to make sure that women have the tenure security they need to access finance for their house. Legal services are also an important intervention that would support women to understand and secure their rights to tenure, in which case that then increases their access to housing finance. Housing microfinance can also be coupled with construction technical assistance. So if women are looking to build an additional one or two rooms in the back, the same microfinance institution, and there are examples of this in South Africa, can also provide construction assistance and advice. And then I think there's also the opportunity of an access bonds facility. So that would allow women to pay ahead of schedule and then draw down against that facility for financing. And the last main thing that we need to concentrate on is the enabling environment, one that is supportive of women and of women gaining access to housing finance. And that means targeted policy and legislative interventions that address tenure insecurity, and then also an explicit collection of data and analysis, disaggregated by gender, And that really is the final key takeaway from the research that we did, is that there's very little disaggregated information that allows us to look at the housing finance sector specifically from the perspective of women and how it meets women's needs. Thank you.
Alison, thank you. This is really interesting and eye-opening in many ways. I mean, I think for everybody on the call today, we do see that housing finance is a challenge across Africa. This is not just a Ghana element. We see this, and you'll see this in Senegal as well when we do present that. And maybe a quick question to you, Alison. When of the people you interviewed, which parts of housing are we looking at? Affordable housing, social housing, across the board? Sort of maybe just give an indication on the size of the income of the people that were interviewed, just to get an idea. Thanks.
Our focus, I should have mentioned that, in terms of our methodology, our focus was on affordable housing. So it was on lower income women and their access to housing finance. So for instance, our mobile survey targeted households with a lower income level at the bottom of the spectrum.
Okay, thank you for that. Great. Alison, this was very rich, and thank you. And we'll come back to questions to you later on from the audience, the participants. Maybe if I can bring in Maureen, in IFCs and your extensive experience in Africa and housing, what are some of the innovations that IFC can bring to Ghana to promote housing finance for the overall population? As we heard from Alison, Ghana's mortgage market is really at early stages with 0.5% mortgages to GDP ratio, and even harder and specifically to the underserved segment, which is women. How do you see, what are innovations that IFC can bring? You're on the ground based in South Africa, but you travel a lot across Africa, so it'd be great to hear from you.
Thank you very much, Julia. Thank you for that question. Great question. So I'm going to answer this question in two parts. I'm just trying to highlight the importance of the enabling environment to have a functioning housing market, which requires really a strong enabling environment. And that includes favorable macro conditions with low inflation and interest rate. And this is lacking in many of our markets. And that is a major, major hindrance or bottleneck, hindering the growth of the sector in many of our countries where we operate. So I think for us to see a really developed, functioning housing market, it requires both the public sector and private sector to come together and work on the enabling environment. If we have valid titles, basic things, banks are comfortable to foreclose when default occur, that will really open up the market. So to come to the second part of the questions, or answer the real the questions really is what on the innovations that IFC has brought in many of these markets. First of all, housing is a local currency business. And at IFC, we have deployed various investment tools in many markets. So I'm going to single out three, Kenya, Tanzania, and the West Africa Economic Monetary Union, through establishing what we call mortgage refinancing companies. These are really liquidity facilities. And these had allowed, unlocked or allowed to bring to market local currency, longer tenor refinancing facility. And we have really seen growth in some of these markets. Let's say in Tanzania in 2010, the market had under 300 mortgages. Now we're seeing the growth in the number of mortgages in that market, where it is about 6,000 mortgages. In West Africa, in the YMO region, mortgages were non-existent before we set up the mortgage refinancing company. We have about 10,000 mortgages in that YMO zone. although it's really a drop in the ocean and we need more in those markets. So a refinancing facility is one tool that we deploy, and it is really beneficial because it's unlocking local currency. It's also providing elevated tenors. So that is one. And another investment tool that we are testing is the rent-to-own models. And this will create a home ownership path, specifically for the low and middle income segment. We work with banks and funds on these RTO models through bridge financing that will allow them to acquire these rent-to-own assets that will then transition into a longer mortgage product. So this, we have tested it in Mexico, and we're working on a project in Senegal. And we're hoping to replicate it in many other markets. We also have seen that mortgages are not really a solution or a plug and play in many of these markets. So we have to think innovatively and bring in alternative products. And then another investment tool is also some of our de-risking instruments. Banks have been on the fence really to underwrite mortgages. And what we do, we offer de-risking instruments where we can share the risks through a portfolio risk, and agree on to some of, maybe we come in with a first loss, or we share the portfolio risk on a 50-50 basis. One of the last innovation that I can mention, I had many, so maybe I don't have enough time to talk through all of them. So it's green homes and green mortgages. That is also targeting women. So we are all aware of the low income levels and lack of supply in many of our markets in Africa. And we have been innovating to support the markets to construct green residential buildings that often cost significantly less to run due to energy efficient savings and utility bills. So that means that the borrower is paying less on utilities, and is also able to better afford to make repayments, and this reduces the probability of default, because now you are able to save on the utility cost of your home. And yeah, I think those are some of the innovations that we had tested in of our markets. So I'm just going to stop here now. Maybe I have another question. Yeah.
Thank you very much, Maureen. This is really interesting to see what are some of the solutions. And just so the audience is clear, having a mortgage refinance company can be done in an underdeveloped housing market. We have done it in different countries, and this really provided liquidity. So don't think that Ghana is not ready for this. Putting the right structure in place and building that portfolio of housing, all of these solutions are very doable in the Ghana context. Maybe one of the interesting things that came out of the study that Alison mentioned, and I read the report, was that only 9 out of the 23 banks in Ghana offer mortgage loans. And so, and even out of the microfinance sector, which is, you do see a bit more, but there's still a handful that offer housing finance products. Maybe from your experience, Maureen, working with financial institutions, how are they looking at this, but also maybe share how they have those large consumption loans and they generate an asset value but not cash flow. Can you bring some perspective on what you've observed in African markets, but particularly in Ghana, if you can?
I think as we have heard from Alison and then the report.
We can't hear you, Maureen. Oh, now we can.
Okay. Yeah. I think what we have heard from Alison and also the report is the mortgage market in Ghana really target more of the upper middle income and high-end segment. It doesn't even look at like middle income or the low income segment. So the market is really developed at that level, whereas where you have bulk of the people that are able to really support the economies of scale, that's not the route that banks are taking to target that segment. And I think this is maybe where we need to test this business case that women mortgages are profitable loans. And for any mortgage or for any mortgage bank, you need the economies of scale, because mortgages on its own are not really profitable products. What we have seen in many markets, mortgages are offered as a cross-sell product, and banks leverage on those information collected during the mortgage underwriting process to offer different products, such as credit cards, overdraft, which tend to attract higher interest rates. That's the only way how you can make money from a mortgage product. Possibly it could be offered at a little bit lower interest, but then you have all the other, I call it a hook product, where you understand your borrower and be able to cross-sell other products, which you will offer at higher rates. I think that's a thing that many of these banks need to look at it. In many of our banks also prefer to really park their money in government securities or bank the corporates, or as opposed to like looking at individual borrowers that are working in the informal incomes, which doesn't mean necessarily they won't be able to repay those loans, or it's not a profitable segment. I think most of these markets really need to innovate more. And this innovation requires collecting data, mining data, understanding the profiles of these borrowers. I think there's a business case for both people lending into those markets, the likes of IFC, the likes of DFC, to work with financial institutions in Ghana and to really, really drill down what is the business case and how can we penetrate this segment.
Yeah, well, it's a chicken and the egg, right? Because if you ask banks, they're like, I want long-term financing to be able to give mortgages, because it's, they're not going to give 10-year loans when their deposits are maybe 6 months or a year.
I think when you're building a market, you don't really go that long term. For example, you could start at home improvement loans, because from the report, we're hearing that these women are already having existing assets. So you start short term, 3 to 5 years, and lenders will be able to support you back in those 3 to 5 years or up to 7 years for you to really underwrite that segment.
Right. No, thank you, Maureen. In the interest of time, we can spend a lot of time talking about this, but I would like to bring in Kojo, who is our practitioner in Ghana, whom I introduced earlier, who is the executive head of the home loans business at FNB in Ghana. Kojo, welcome, and thank you for joining us today. It's really sort of interesting to see the strides that your institution has taken in housing, considering what we've just heard. Maybe you could provide an overview of your housing portfolio in terms of the segments that you serve, the performance, to get an indication on your experience in housing finance, but specifically towards women. Thank you.
Right, thanks, and a good afternoon and a good morning to everyone, depending on where you are. Maybe before I give my comments, I need to probably issue a bit of a health warning so that everything I say is put into some kind of context. So I think the report stated it, and it's absolutely the case that mortgages, home loans, account for less than 1% of GDP. Other markets, you're looking at 40, 50, upwards of 80% of GDP. So so mortgages as a product in Ghana still remains rather insignificant. That's the first one. The second one is data, reliable data on land-related transactions is quite difficult to obtain. And the simple reason for that is if I buy a house or I buy a parcel of land, I'm not required to register it immediately. I'm not required to report to anyone. So I could buy 10 plots of land and nobody would ever know about it, right? So a lot of transactions happen on the blind side of the authorities, if you like. So whenever you're doing a survey and you go to the places you'd expect to get this information from, invariably you'll draw a blank, right? The other bit is affordable housing. I mean, I know the question was put, what segment are we looking at here? And the answer was affordable housing. The definition of that is quite fluid. So one person's affordable house is another person's castle, right? So, I think I just need to say this before I jump into some of the points that have been raised so far. So the comments have been made about and I think the survey picked up on the fact that only 9 out of 23 banks in the market offer the home loans product. That's a marked improvement from where we were back in the mid-2000s. Well, when Ghana Home Loans came along, it was only one other bank that offered it. So there were 2 of us in the market, and it was a very lonely place. And even then, it was through the support of then OPIC, now DFC. I see Deborah Erb has just logged in. And then IFC and such institutions that came to back the launch of the institution of Ghana Home Loans as a mortgage provider, because generally it's perceived as a very risky product. And the reasons are obvious. One, long-term funding is hard to come by, and when you get it, it's quite pricey, whether you're using local currency or FX. Property prices for those looking to buy.
Hi, Kojo, we can't hear you anymore.
Sorry.
It cuts out sometimes. What was the last thing you said?
No, I was giving the reasons why banks historically have not been too excited about the home loans product. And I was referring to the cost of long-term funding. I referred to property prices, the cost of completed properties for those looking to buy from estate developers.
Mm-hmm.
The land title administration, I've seen several comments relating to this on the chat box. The land title administration is much better than what it used to be. Still work in progress. All kinds of things happen in that space. But for a bank, I think the worst one of them all is the foreclosure process. If you've given a loan and something goes wrong and you're trying to recover this asset through the courts, you could be in there for a very long time. So when you add it all up, unless you really absolutely understand the space, it's very difficult to expose yourself to that segment of the market. That's why banks tend to, I think Maureen made the point, either give money to government or play at the short end of the curve, because lending out 15, 20 years, which is what we do, we give out 20-year money, opens you up to all kinds of risks that you really need to understand. And over and above all of that, the point that has been made several times today is income verification. And I think what's happening here is we're using women as a segment, as a proxy for the informal sector or for the self-employed sector. And that's fair because they do represent a majority of that sector. But self-employed definitely in these markets where you run your own business, you keep, let's be frank about it, some institutions keep 2 sets of books, right? They're the real books and the books they show the tax authorities. Bank accounts, you may or may not operate them. So when you come for a home loan, when you come for a mortgage, you need to demonstrate your income. And these are some of the documents we ask you to provide. Now, and we ask for these documents because long-term lenders such as IFC and others will ask us to get some kind of documentation to prove eligibility for the loans. And so we'll ask the self-employed person, the lady entrepreneurs, that listen, give us a sense of what you earn. Give us audited financials. Give us receipt books. Show us anything that confirms your income.
I don't know
most
if
people,
everybody can't hear. I can't hear you, Kojo, anymore.
okay. I don't know if,
maybe a last, because specifically, maybe it's really interesting to hear the context, and thank you for sharing this. Maybe what has FNB developed in terms of solutions to targeting housing finance for women, particularly, that we can learn from?
yeah. So I was coming to that. So we haven't targeted anything to women as a segment. The closest we've come to that is a product called the Save to Own home loan. Save to Own is a product that starts off by observing that, as I was saying, that income verification is quite difficult in the self-employed segment, right? So you know the individual makes money, but you don't know how much they make, and they can't prove it to you. So we created a product which starts off by us determining how much the person wants to borrow. And then we tell them, right, the loan you're looking to borrow means you have to make monthly installments of, say, 3,000 cedis. So we'll open an account for you and set you a target. We'll say to you, make these installments of 3,000 cedis for, say, 12 months or 18 months into this account. You can't withdraw. You should make the payments in full and promptly over that period. And if you are able to successfully pass that test, then we go ahead and disperse the loan. So that's the product we came up with about 4 years ago to target the self-employed, and by extension, the woman, the female borrower, if you like. The response has been mixed. It hasn't been quite the explosion we were looking for, and the reasons for that are, again, understandable. You know, when someone wants to buy a house, they want to buy it today. They don't want to wait for 12 or 18 months to do so. And we're re-engineering. We are coming up with Save to Own 2.0 to address that particular shortcoming of the 1.0. But the reality is that most people looking to buy, and I think the survey touched on it, most people looking to buy or build homes would rather use their own resources. It's very much a cash economy, and we know from experience that a lot of the ladies who come to us, women borrowers, tend to be more liquid than average. So you find a lot of them, they look at the conditions you give them, and they rather go off and pay in cash installments to the vendor, or if they're looking to build, they build on their own land using their own resources, sometimes taking short-term loans from microfinance or savings and loans institutions. So what appears there as a short-term loan for trading is actually being used to build property. I don't know if that addresses your question, but it's the ability to build without necessarily taking a home loan, without taking a mortgage. That's what's making it British. That's what's showing up in some of the numbers we are discussing. The other bit is market education, right? There's a lot of there's apprehension when it comes to using the primary residence as collateral. So the product we thought would be the number one product, which is the equity release product, using your home as collateral to raise long-term funds to support your business, to grow your business. That's where you meet the greatest resistance, because the question you always hear is, well, what happens if I don't pay? And the answer is obvious. If you don't pay, well, we'll have a bit of a conversation, then we go for foreclosure. And at that stage, most borrowers say, okay, you know what? I'll find some other means of funding, because I don't want to put my house, the roof over my head, on the line. So there's a bit of market education that needs to get in there so people get more comfortable with the product in general. And that's something we spent a lot of resources doing.
Thank you very much, Kojo. I mean, you have so much experience. I could speak to you for hours, but we are 9 minutes from the hour, and I just want to give a chance to participants to ask some questions. So thank you, Kojo, for sharing your experience. We would like now to open the floor to Q&A. We do see some questions in the chat. We'll try and address them, but if we do not address them, we can look at them later on and get back to you by email. But please, if you want to ask a question, please raise your hand or unmute yourself and jump right in. I'll give a moment for people to jump in, and I'll look at the chat in the meantime. Anybody want to ask a question? There's a lot of activity in the chat, so I'm trying to read what they are.
Hi, Julia. Apparently, I think everybody is muted. So maybe what we can do is just pick a question from the chat.
Sure. Okay. One of them was from Patrick. Do we know the average loan size at origination of a mortgage loan in Ghana? The tenor, this will give a sense of where the market is currently. Alison or Kojo, do you want to take that question briefly?
Sure, I can just offer from our CAF's yearbook process, where we collect data annually from all African countries around housing and housing finance. We are always challenged with getting mortgage lending data. But our data that we published for Ghana for 2022 said that there was a slight increase in the number of residential mortgage providers. So I quoted 9 in my presentation, but in 2022, it said that there were 12, and perhaps Kofu can confirm that. We were not able to get the number of residential mortgages outstanding. That data was not available, which is an issue for the market. In terms of the mortgage rate, it's quite high. The data we received was that it was between 19 and 32%, and that the tenure, Patrick, was about 20 years. So quite short. But I'm sure Kofu has more on the ground information.
Thanks, Alison. Kojo? Any additions? Okay.
Right. So if the question is, what's the average size of mortgage loans in Ghana, we are looking at around the equivalent of about $50,000. And it's a market segment that's heavily dollarized. So you find a lot of these stats come out in dollars. So if you take 50,000 multiplied by 11, that's about 550,000 cedis. That's pretty much where the average is right now. And that's because the mortgage market in general targets not so much the affordable end, but a layer above affordable. So if it sounds relatively high, that's the reason.
All right. Thank you for that. There's another question from Asad Mahmoud. The World Bank, IFC have created mortgage refinance companies in several countries, including Kenya, Nigeria, Tanzania, etc. This is an important effort to expand mortgage financing. However, this subsidized financing captured mostly by banks and who do not need the money and do not have interest to lend for affordable housing. What can we do to get these mortgage refinance companies to lend to NBFIs, SACCOs, MFIs, SEMA funds? Maybe Maureen, do you want to take that one?
Yes, I think let us make it clear about the role of the mortgage refinancing companies. It is to allow banks to underwrite long-term mortgages. So before the establishment of an MRC, mortgages are non-existent or are very short-term. So these mortgage refinancing companies allow the banks to underwriting 20 to 30-year mortgages, which was not there before. That's the whole essence of having a mortgage refinancing company. Tap the capital market to raise local currency and elevated tenors. So in many of the markets where we have established these MRCs in partnership with private sector banks, we have learned lessons from one country to the next country. We have seen, for example, in Kenya, Kenya has under 26,000 mortgages, which are registered. But the majority of home loans sits with SACCOs or MFIs because those loans are unsecured loans. They are not really categorized as mortgages, but that's where the bulk of the housing lending lies. So in establishing the KMRC, we have learned that we need to include SACCOs and MFIs as partner institutions to set up these MRCs. I think from one country to the next country, we have learned the lessons and we had brought them on board. So SACCOs and MFIs in Kenya, they are part of the MRC.
Okay.
And in Tanzania, we are also doing the same exercises where we are onboarding MFIs. And also with CRH in Y Musone is also the same case. I think the work is in progress and we have already started working on that.
Okay. There's several questions, but we don't have a lot of time. I'll take one more question, then we can address any other questions by email. Maybe I'll take the one from Naeem Razwani, who's asking, are there examples where the gender-based lending is treated differently in terms of risk-based costing? I don't know, Kojo, would you like to address this briefly, or Maureen, if you have seen this?
Sorry, Julia, I just put an answer on the chat as well, just in case.
I'm sorry, Montserrat, I didn't understand.
Sorry, I just answered that question on the chat to Naeem directly, but this is related to Mexico. So if anybody else has an experience on that in Africa, that would be great to know.
Thank you.
No, we don't discriminate. We don't have any credit risk parameter which differentiates between gender.
Okay.
And Julia, I was saying in the chat, which is interesting, I think, perhaps for the regulators, that actually in Mexico, they issue some sort of like policy 2 years ago during the summer that actually recognizes like the positive behavior of women when borrowing money, and actually provide a better sort of like a better appreciation of the portfolio in housing for women, and they request less reserves for this particular portfolio. So that's a great question, and I think that these examples from Mexico, for instance, could have a demonstration maybe effect in other regions, no? Because as we all know, women tend to have lower NPLs and they are very good payers. So maybe this could be reflected by the financial institutions.
Okay, thank you very much. It is on the hour now. I would like to thank our panelists and speakers. This has been a very rich conversation, which we could dwell on for hours, all the problems and the potential solutions. Despite the challenges that women face to access housing finance, this market, from what we hear, can present significant opportunities for both women, but as well as for financial institutions to grow that segment. Home ownership, we know, provides shelter, safety. It's an asset that can be used as security and can help women build credit history. So there is no question on its importance, but it also can be a means to finance a small enterprise from the home. and grow. I've seen, microfinance clients that have their home as their business and now are employers. And so this is a small micro that can become a small business loan. So homes is not just a means to have shelter and safety. There is more elements to it. I've worked in microfinance for many years, and they confirm that women are better payers. Now that's sorry, gentlemen, but if women are better payers, why aren't we giving them home loans, right? So that's the question that remains. And I think Africa's on the cusp of really moving forward on this, whether it's on regulation changes, whether it's on financial institutions opening their spectrum to other segments, particularly women who represent 50% of the world population. I don't want to go too much into it because we're already 2 minutes late, but with that, the IFC is really delighted to publish this report and would like to warmly thank the panelists and participants for attending today's session. It's been an interesting conversation. Please note that this is the first of 3 sessions of Her Home 2. The next report will be for Senegal, end of September, early October, and we look forward to seeing you then, and there'll be another one for Indonesia. You will be receiving emails, alerts on when it will be exactly. I will stop here and thank you and have a wonderful day. Goodbye, everyone.